The March 2026 numbers are in, and the spring market is showing real strength across the Bayou board. Closed sales are up over 33% compared to last March. Buyers and sellers are getting closer to meeting in the middle, and affordability continues to improve. But under the surface, each parish is telling its own story, and that's what we're breaking down today. Let's talk about it.
Welcome to the RE Real Estate Podcast, where we discuss buying and selling real estate in black and white. Here are your hosts, Ben Harang and Clint Galliano.
Hello, everybody, and welcome to another episode of the RE Real Estate Podcast. My name is Ben Harang, and with me is my co-host, Clint Galliano. How you doing today, Clint?
I'm doing wonderful, Ben. How are you doing?
I'm doing terrific, man. Life is wonderful. No complaints. Nobody wants to hear it anyway. So, what are we going to talk about today?
All right. Well, it is that time of the month. We've got market numbers for the whole Bayou board, and last market update, we covered Houma and Thibodaux and then some specific zip codes related to Houma and Thibodaux. So this month, we're covering the parishes that make up the Bayou board in addition to Houma and Thibodaux. So we're going to start it out with the overall headline numbers for the total Bayou board. And first up is closed sales. Those surged 33.6% year over year. These are numbers for the month of March. So that means that in March, we sold a third more homes than what we did in March of last year. And year to date sales are up 24% year over year. So the last year was 282 and this year's 350.
Wow.
How crazy is that?
It is. It is wild. Pending sales are up 9.8% for the month and up 22.4% year to date. The spring surge is real.
Indeed. Now, new listings dipped 5.9%. So that was 221 down to 208. Year to date, it's down 2.6%. And so sellers are still coming in cautiously.
Mm-hmm. And the month supply for the Bayou board wide went from 7.8 to 6.5 months of inventory, which is a 16.7% drop as the inventory continues to tighten.
Now, the median sales price dipped slightly to just under $199,000. It's about a 1% drop slightly over that. But the average price rose 2.8% to just a little over 216,000.
And then the percentage of list price received on closed sales ticked up to 96.8%, up almost 0.5% as buyers and sellers get closer to an agreement.
And the big news is that the housing affordability index is up to 143. So that's up 3.6%. So that affordability is at its best in recent memory. That's really good news because that's kind of a big thing nationally is that homes are unaffordable. So with that index going up in our area, it's a great thing for people that are looking to buy a home.
So just note that now is the second consecutive month showing strong closed sales growth, which suggests the spring market isn't just a 1 month blip. So it's real, it's here, we're living it, and everybody I talk to is super busy.
All right. Next, we're moving on to looking at some differences between February's numbers and March. Just kind of a little gut check. February closed sales were up 25.9% year over year. March is up 33.6%. So that's acceleration. It's not just momentum.
In February, pending sales were up 14.7%, March up 9.8%. It's still growing, but from a higher base. So we can't keep that rate going, but it's still growing from a higher base.
And inventory, February we had 6.6 and March is 6.5. So it's steady tightening.
It is. And you could see buyers don't have as many options as they once had. That's why if you're going to get in the game, now's a good time to get in. So the percentage of list price received for February was 95.5% to March is 96.8%, which is a meaningful jump in a 1 month time period.
Yeah, that sold to list price jump in 1 month is a metric to watch. That means sellers are getting a little bit more of their asking price as the buyers compete for shrinking inventory. I'd say the buyers are having a little bit more of a struggle on average.
And then some metrics to look at. The affordability is up, sales are up, inventory is down, list to sale ratio is improving. That's 4 positive indicators that are all moving together in the same direction.
That's always a beautiful thing.
It is. It is.
All right, up next, we're looking at the Houma market update. So the March 26th snapshot. All right, so market type based on inventory, it's a buyer's market, but moving towards balanced.
With the months of inventory at 6.59%, down almost 5% month over month, and down 13% year over year. At 6.59, it's a little over a balanced market. 6 months of inventory is what is typically considered a balanced market. So
Yeah, it's
it's
right on that fence.
it's getting closer to a typically balanced market.
All right, sold to list prices 97.4%. So that's up from 95.5. So that correlates with what we've seen in the board wide market. That's significant.
So the median days on the market is 62, which is down 30 days from February. It was 92 days in February, which is a 33% drop in days on the market. That is absolutely insane.
Median sold price is 212. So that's down 1.4% month over month.
And then the median estimated property value is down 0.4% month over month at $226,000 and up 2.8% year over year. So that essentially didn't change.
Yeah, what that's telling us is that the properties in Houma are selling for under their estimated value. And the median active list price is 46 and a half, or I'm sorry, 246 and a half, 4.9% month over month. And that continues on from our discussion from last month in that properties are still being priced or overpriced and selling for way below list price.
Right. And then the median new pending list prices is $215,000, which is up 2.4% month over month. I know these are a lot of numbers we're throwing at you, but at the end of the day, the real estate market across the Bayou Board region is improving.
Houma's warming up fast. In just 1 month, the February picture of a clear buyer's market with 92-day sitting times has shifted meaningfully. Days on market dropped from 92 to 62, a full month shaved off. The sold to list jumped from 95 and a half to 97.4. Inventory tightened 4.8% in a single month. active list prices jumped 4.9%. So here's a contrarian note. The median sold price actually dipped from 215 to 212,000. $34,500 gap between the median and active list, 246.5, and the median sold, 212, is still significant, meaning overpriced listings are being filtered out.
Yeah, it means the ones that are priced right are selling, and those
That's
that are not
right.
priced right are not selling. So this is a kind of 1 month shift that changes conversations. If I was advising a Houma buyer in February to take their time and negotiate hard, that advice needs updating. The window for maximum negotiating leverage is narrowing. So again, if you're in the market to buy something and you're waiting for the market to change, it's changing before our eyes. For investors, the combination of rising list prices and faster absorption suggests the acquisition window at discounted pricing may be closing.
And for sellers who are hesitant to list because of the slow February market, March is showing that properly priced homes are moving twice as fast. The 62 days on market is meaningfully better than February's 92, and improving sold to list ratios, meaning that you're keeping more of what you asked for.
Houma is still a buyer's market on paper, but the trajectory is clearly moving towards a balanced market. If you're a buyer, don't assume you'll have the same leverage in May or June that you had in February. If you're a seller, price it right, and you're now going to get closer to the 98 cents on a dollar once you price it right.
Calling it now.
Go ahead.
All right. Thibodaux market update. Here's the March 2026 snapshot. Market type is a seller's market, in clear contrast to Houma's buyer's market or barely buyer's market. Months of inventory. Why don't you take that one, Ben?
Months of inventory, we only have a little over 4 months of inventory, which is actually up 5.7% month over month and down 7.3% year over year. That 4 number puts us squarely into a seller's market in Thibodaux. And based on negotiations that have occurred and are ongoing, there's no doubt it's a seller's market in Thibodaux.
Yes, indeed. All right. Sold to list price, 96.5%. That's down 2.5% month over month.
And my thought on that one is because it's a seller's market, sellers are getting aggressive and wanting more to list, but the prices are really not changing as fast as the sellers want them to increase. So that's just an observation. Median days on the market in RPR is 43 days, up roughly 12 days from February, but 43 days from list to close is like, if you're going to put your house on the market and it's priced right, I tell people, pack your rags, get your suitcases ready, because when we put the sign in the yard, the house will sell.
Yeah, because that's kind of crazy. I mean, so when I'm working with a buyer and I write a contract, I write it to close in 45 days, roughly. Sometimes it's a little bit less, sometimes it's a little bit more, but that's pretty much that is getting a contract on day one it's on the market and closing within 6 weeks.
Closing in less than 45 days from the days on the
Yeah,
market, not the day
that's right.
a purchase agreement is written.
Yep.
The median sold price essentially stayed the same at a little over $251,000.
And that's up, just barely ticked up. Estimated property values just a shade under $250,000, and that's up just 0.7% year over year.
So here's an interesting number. The median active list price is $278,000, while the median new pending list price is $225,000. So it's over $50,000 difference, the median between the active list price and the the list price of the houses that actually went under contract in March. So again, the higher the price houses, the longer it takes to sell, the lower the prices, the faster they sell.
The big story here is that Thibodaux is a different animal. Where have I heard that before?
That is so true. That is so true.
So if Houma's story is that it's a buyer's market warming up fast, the Thibodaux story is that it's a seller's market showing early signs of friction. 3 data points tell the tale.
The sold to list price went in the opposite direction of Houma. Houma jumped from 95.5 to 97.4%. Thibodaux dropped from 99% to 96.5%. Sellers got less of their ask price, but I think the ask price went up.
Active list prices are up 4.6% month over month, but new pending list prices are down just under 1%. Sellers are pushing asking prices higher, but homes actually going under contract are the lower priced ones.
Mm-hmm. And then the gap between a median active listing is at 278,000 and a median new pending listing at 2.25 is $53,000 or about 19%. So again, the median listing is 278. The median list price of the houses going on the contract is 225. So the lower price houses are selling a whole lot faster than the houses 300,000 and above.
Yeah, and that's like your Cane Ridge houses and maybe some of your Field Chase stuff and your other resale houses. All right, so Thibodaux's fundamentals are the opposite of Homa's in almost every direction. Nickel State, Thibodaux Regional, and Lafourche Crossing corridor keep demand baseline elevated, and 4 months of inventory reflects that. Buyers shopping in Thibodaux can't approach it the same way they are in Houma. Leverage isn't there.
But here's what sellers in Thibodaux need to hear. The 4.6% jump in the active list price is not a green light to overprice your house. The sold to list percentage dropped to 96.5%, and the pending pool is coming in at 2.25, well below the $278,000 median list price. In plain terms, the homes pricing realistically are moving, and the homes chasing the top of the market are sitting. Even in a seller's market, you have to price with the comps, not aspirations.
All right, now for the investor angle. Thibodaux's median sold price of $251,000 is about $39,000 in Homer's $212,000. That's price
crazy.
Premium, that's just insane. That price premium puts the tighter inventory, plus the tighter inventory means acquisition opportunities at a discount are scarcer here. If you're hunting for value, Houma is still the better playground right now. If you're hunting for stability and tenant demand driven by anchor institutions, Thibodaux owns the premium.
And it's a matter of what sandbox you want to play in. We're going to talk about the 4 parishes now. We talked about the Bayou Board of Realtors MLS wide. We talked about Houma. We talked about Thibodaux. So now we're going to take Lafourche, Terrebonne, St. Mary, and Assumption, and just kind of see where those numbers go, and you'll see different stories in each parish. So Assumption Parish is typically a buyer's market. It historically has been, and seems like that's where it is.
Yeah, and then as far as inventory, they're at 7 1/3 months of inventory. That's up a little over 2% month over month, but down 16% year over year.
Mm-hmm. The median estimated property value is $197,000, up 1%. So it's up a little less than $2,000.
Median active list price is a little over 246,000, and that's up almost 15% month over month.
Hmm. And then the median new pending list price is $160,000, as opposed to Thibodaux at, what was it, two and a quarter?
Yeah.
It's a completely different real estate market in Assumption Parish.
As far as sold to list ratio, days on market, median sold price, none of those are reported ultimately just because of a low single month volume in Assumption for March.
Yeah, the data in Assumption is the thinnest that we have between the four parishes we operate. The gap that sellers are asking at 246 and what's actually going under contract at 160 is an $86,000 difference. So if you price it right, it'll sell. If you don't price it right, it's gonna sit. The higher end listings are sitting. The realistically priced ones are moving. Inventory is down 16% year over year, but 7.33 months of supply still puts buyers firmly in the driver's seat, as they negotiate on the listings.
All right. Next up, Lafourche Parish. And Lafourche is sitting in a balanced market, and it's the only parish of the four sitting dead center. It's got 5.77 months of inventory, which is up just under 2% month over month and down 12.3% year over year.
And then the sold to list price is 95.6, which is actually up 1.6%.
That's down.
I'm sorry, down 1.6%. You're right. My bad.
It's all good. All
Can't
right.
get it all right all the time,
Hey, everybody's perfect all the time except for that one time, which makes them even more perfect, right?
except us. Right.
All right. Median days in RPR for Lafourche Parish is 54. That's up 12.5% month over month. That's still
And
not shabby.
it's not shabby. It's not shabby. But if you think about it, Thibodaux's at 43 days. Lafourche Parish is at 54.
And the
So to get
bulk of that
43,
volume is in Thibodaux.
right, right. So the ones that we're selling outside of Thibodaux, as we go down a buyer, it gets slower and slower. So the median sold price is $201,500, which is down 9.8%.
Median estimated property value is a little over 232,000, and that's up just under 1% year over year.
And then the median active list price is $246,000, up 6.8% month over month.
And the median new pending list price is 197,000, and that's down just about 8.5% month over month.
So Lafourche is has the broadest geography of the group. Thibodaux is in the northern part of the parish, down through Raceland and Rolls, Galliana, Golden Meadow, and out to Port Fouchon. Active list prices jumped 6.8% month over month to $246,000, but sold prices dropped 9.8% from $201,500 to $201,500. And new pending list prices dropped 8.4%. The listings coming to the market are pricier, but the listings actually moving on the lower end of the scale. The market is absorbing affordability and rejecting aspirational pricing. I like that. Aspirational pricing. What you think you want.
So that kind of seems to be the story going on almost across the board.
Mm-hmm.
And I get it, but it also ties into what we see on a regular basis is that the buyer pool for the higher priced properties is smaller than what we see selling or what we call our bread and butter pricing bands.
Absolutely.
All right. Next, we've got St. Mary Parish. They're definitely in a buyer's market, and they're the most buyer friendly of the 4 parishes.
So the months of inventory in St. Mary Parish is 8.8 months of inventory, which is almost three points higher than a balanced market. That's actually down 2.8% month over month and down 34% year over year, the largest year over year drop of any of the parishes. Again, St. Mary is not as thin as Assumption, but it's still pretty thin as far as the data.
All right, sold to list 96.2%. That's up 7.3 month over month, and also the biggest improvement.
And the median days in RPR is 149 days, up 44% month over month, with the longest sitting time in the board area. Ouch.
That tells me is that there's opportunity for people looking to invest
Right. Or live.
or live.
The deals are to be made in Assumption in St. Mary if you're not going to be selling them in 6 months.
All right, median sold price is $155,000, and that's up 8% month over month.
And then the median active list price is $200,000, up 12% month over month.
Median estimated property value is $148,000. So that's up a little over 2% month over month, but down 5.5% or so year over year. That's fairly close to the estimated property values, fairly close to the sold price, which is kind of interesting. See that
I
lining
think
up.
that's the closest they are in the 4 parishes.
I think so.
And then the new pending list price is 174.9, which is up 45% month over month, but it's still almost $25,000 below the median active list price.
It's aspirational.
There you go. Aspirational. I need to put that in my repertoire. All right. St. Mary is a study in contradiction. It's the softest market by most measures, but inventory has collapsed 34% year over year, the sharpest tightening in the footprint. A market that was deeply buyer favorable is finally starting to heal. The $155,000 median sold price with $200,000 median active list price means real deals still exist for patient buyers, but the window is narrowing fast. Can't impress on you enough. If you've been thinking about buying a house, now is the time to buy it, regardless of where you want it to be. If you're going to be in Thibodaux, you can find something in Thibodaux. If you want to be in St. Mary or Assumption, you can find a better deal. Into Houma, you can probably still find a deal, but they're fewer and further between.
Speaking of Houma, let's talk about Terrebonne Parish.
That's where
All
Houma is
right,
located? I didn't
that's
know that.
right.
Oh,
Yeah.
sure.
When you think Houma, you think Terrebonne Parish. All right. So
Yes, you do.
Terrebonne Parish is still a buyer's market, but like similar to Houma, it's getting closer to being on the fence. It's the same classification as Houma, but it's slightly softer picture with the whole parish view because it includes all the outlying areas.
The months of inventory is 6.96, which is down for almost 5% month over month and 14% year over year. So it's getting better.
Sold to list is 97, almost 97.5%, and that's up almost 5% month over month. And it's tied with Houma for the highest in the board.
And I think that's coming from more realistic pricing on the listings. The median days in RPR is 78 days, which is down 19% month over month. So that's getting better. That's a good sign.
Median sold price is a little over $200,000, and that's up a little over 10% month over month.
Then the median estimated property value is $223,000, not quite 0.5% up month over month and up almost 3% year over year.
So that's opportunity there. That's a sign of deals being had. And then the
You're right.
median active list price is $235,000, and that's up a little over 2% month over month.
And this is the closest one. This one just jumped out at me, Clint. The median new pending list price is $230,000, where the median active list price is $235,000. In the other areas, we were looking at a $50,000 plus difference between the pending list price and the active list price. So this really means the list prices are coming in line with the closed prices, which also supports the 97.5% list to sold price.
Yep. Somebody's paying attention.
Mm-hmm.
Standout data point is a 15% month over month jump in new pending list prices to 230. Homes going under contract right now are priced meaningfully higher than what was pending in February, and forward looking evidence of price momentum, combined with the 14% year over year inventory drop and the almost 3% 12-month estimated value growth. Terrebonne looks like the parish with the most consistent upward trajectory, which is a nice turnaround.
It is. It is. So which parish is the strongest performer and which offers the best opportunity for buyers or investors? Based on the numbers, Lafourche and Terrebonne parish-wide are the strongest performers, with Thibodaux and Lafourche and Houma and Terrebonne leading the way in Lafourche and Terrebonne. And then Assumption and St. Mary offer the best opportunities for buyers and investors. So if you're looking for a deal, you'll probably be attracted more into Assumption Parish and St. Mary Parish, but there are deals to be had in those two parishes. But if you're going to go there, be in it for the long game. Don't go buy something thinking you're going to get out in 6 months or a year.
Yeah, definitely not flip opportunities.
Right. Be in there for 5+ years, and I think you have a deal going on.
Yeah. Thinking about how the outlying areas compare to the urban cores of Houma and Thibodaux, we've discussed this multiple times. Outlying areas are just the market is a lot slower in those areas. In a lot of cases, the costs and expenses are more, mainly due to insurance, homeowners, and flood. Ultimately, the people are drawn to the urban cores because that's the place to be.
Okay. Cross parish comparison. Hopefully we can put this in the show notes, Clint. But the market type in the 4 parishes, Assumption is a buyer's market. Lafourche is balanced, trending on a seller's market. St. Mary's is a buyer's market. Terrebonne is a buyer's market, trending towards a balanced market.
Months of inventory for Assumption is 7 1/3. Lafourche is 5 3/4. St. Mary is 8.8, and Terrebonne is just under 7.
Then the inventory year over year change. The inventory is down. In Assumption, it's down 16%. Lafourche is down 12%. St. Mary is down 34%. And Terrebonne, it's down 14%. So the buyer has fewer options to buy.
Indeed. Sold to list. All right. For Assumption, we don't have a sold to list for March. In Lafourche, it's a little over 95.5%. In St. Mary, it's a little over 96%. And in Terrebonne, it's just under 97.5%.
And then the days on the market, again, Assumption doesn't have statistically enough to have an average days on market or median days on market. Lafourche is 54 days. St. Mary's 149 days. and Terrebonne is 78 days. So if you're looking for a deal, it probably has to be a St. Mary property.
Yeah. All right. Median sold price. Again, assumption uh, there isn't enough data for them to compile that. Lafourche, little over $200,000. St. Mary is $155,000, and Terrebonne is l- literally just a couple of $100 less than Lafourche, just over $200,000.
The Fuchs and Terrebonne right at $201,000. So the
Neck
median
and neck,
active, yeah,
neck and neck.
friendly
Call that race.
competition. The median active list price in Assumption is 246,000. Lafourche is 246,000. St. Mary it's 200,000, and Terrebonne it's 235,000. And Terrebonne, if you remember, the median pending list price was only $230,000. So that's the tightest those two numbers are in a 4-parish area.
And speaking of tightness, so which parish has the tightest inventory?
We beaten that dead horse.
Yeah. So, and we're talking Thibodaux aside, right?
Right. It includes Thibodaux. Thibodaux's a city, not the parish. For context, it's 4.07 months is of inventory is tighter than any parish. Lafourche leads the 4 parishes at 5.77 months of inventory, with Terrebonne at 6.96 and Assumption at 7.33 and St. Mary at 8.81. And what I'll point out with statistics, because anybody, how do you say that?
Lies, damn lies, and statistics.
Yeah, that's it. Without the inventory in Thibodaux, the inventory in Lafourche Parish would be higher than 5.77. Without the inventory in Houma, Terrebonne inventory would be higher than a 6.96. Houma and Thibodaux bring down the numbers and make the whole parish look more competitive than it would be without them.
All right. So, where are buyers getting the best deals? So, St. Mary and Assumption by price point. If you're looking at it purely by price point, with the median sold price in St. Mary of 155, it's the lowest in the board. Assumption's got a median sold or median new pending list price at 160. That's the next lowest entry point. St. Mary still favors buyers with 149 days on the market, but that leverage is eroding fast because that is dropping. So if you're a first-time buyer or an investor hunting value, St. Mary and Assumption are where your dollars will stretch further. I think this is going to be the third time we talk about this today.
Well, because it might be true.
Because it is true. Trade-off to that is that you have slower appreciation and thinner comps.
So where are the houses selling the fastest? I'm going to sound like a broken record. Lafourche closes in 54 days, Terrebonne in 78 days, St. Mary in 149 days, and Assumption is so thin, there's no reportable days on the market. Lafourche is moving faster than the other parishes, but remember, Thibodaux sits inside of Lafourche at 43 days, and that's pulling the parish average down. The rest of Lafourche is closer to Terrebonne's pace.
And most opportunity for investors. So cash flow investors with tight budgets, St. Mary. It's lowest entry point, longest negotiation window, and biggest year-over-year tightening signal.
Appreciation-focused investors, Terrebonne is 2.8% year-over-year estimated value, 15% month-over-month on new pending list prices, and 97.4% of lists of sold to list price. So it's definitely tightening up in Terrebonne.
Deep value contrarians. So if that's your MO, Assumption Parish is where you need to be. The $86,000 spread between the active list and the new pending list means that patient investors can get real discounts on aged inventory.
And the balanced bet investors, is Lafourche. If you don't like the cyclical up and downs, Lafourche's numbers stay in a tighter range. It is a balanced market, moderate inventory tightening, and the broadest geography to work. So you can still get deals in Lafourche the further south you get.
All right. Now we're going to compare some city versus parish pricing dynamics. Two cities in Bayou Board coverage area tell different stories relative to the parishes they sit inside. Houma versus Terrebonne Parish, there's a modest city premium. Houma median sold is $212,000 versus Terrebonne Parish wide is $201,000. So that's $10,000, almost $11,000 premium. Houma's days on market is 62, where Terrebonne's days on market is 78. And same with, they have the same 97 and a half sold to list. Houma is slightly hotter than its parish, but the gap's narrow.
Okay, let's talk about Thibodaux versus Lafourche Parish. I sound like a broken record. There's a dramatic city premium. The Thibodaux median sold price is $251,000 versus Lafourche's parish-wide sales price of $201,000. Almost a $50,000 difference between in the city or in the 70301 zip code versus the rest of Lafourche Parish.
That's just city limits.
Just city limits. Okay, my bad. Thibodaux is an active seller's market at little over 4 months of inventory, and Lafourche Parish is balanced at about 5 3/4 of a month of inventory, a little less than 6 months. 6 months is balanced. So overall, Lafourche is trending on a buyer's market, but it's essentially balanced. Thibodaux closes in 43 days, which is phenomenal. But Lafourche Parish closes in 54, which is actually a very good number in 54 days. For buyers, widening the search into the rest of Lafourche is a legitimate way to find more inventory and less competition. And for sellers in Thibodaux, don't benchmark against parish-wide comps. The city commands its own pricing. So when you're talking to an agent, make sure the property is, if you're in the city, they're using comps in the city. If you're outside the city, use comps outside the city. And then again, the urban demand anchors, Nicholls State University, Thibodaux Regional Hospital, the Lafourche Crossing, Highway 308, LA1, Bayou Lafourche Corridor are doing
Boulevard.
Canal Boulevard, North Canal Boulevard, as long as they don't close the bridges. Doing the real pricing work here.
Every one of the 4 Bayou Board parishes is tightening year over year. The smallest decline is Lafourche at negative 12, a little bit over 12%. The largest is St. Mary at negative 34%. The unifying story is that inventory is being absorbed faster than it's being replaced across the entire footprint. Question for buyers is, should I wait anymore? I'm sorry, it isn't, should I wait anymore? You know, it's like that. I don't know about you, Ben, but it seems like I hear that a lot is, should I wait for the market to settle down? Should I wait for interest rates? Should I wait for this? Should I wait for that? The question, the question is, which parish fits my budget, my timeline, and my goals? Waiting in any of these markets is likely to cost you.
And the longer you wait, the more you're going to pay off somebody else's mortgage rather than starting to pay yours off. I know a 30-year mortgage is intimidating, but if you don't start that, you're going to be paying rent for the rest of your life. If you start now, you have 30 years on a mortgage. If you start in 5 years, you have 5 years plus 30 years. So now is as good a time as there ever was to get in the market. So board-wide seller takeaways, just some takeaways and to wind it up, Clint. The market has shifted in your favor compared to 3 months ago. Sold to list ratios are improving. Days on the market are dropping in every parish. and inventory is tightening across the board. But the homes pricing aspirationally are sitting. The homes priced aspirationally are sitting. And I will add that to my repertoire. Aspirationally. I like that. The homes priced realistically are selling. Price with the comps and not the list prices.
All right. Buyer takeaways. Affordability is still strong at 143 housing affordability index. And you still have room to negotiate in most of the Bayou board. 96, 97% average sold to list. But the tightening is real and it's accelerating. Houma's days on market dropped by a full month and 30 days. St. Mary's inventory is down almost 35% year over year. Waiting is no longer a neutral option.
Right. And then a board-wide investor takeaway. Wholesales up 33% year over year. Pending sales are up 22% year to date. This is the most active Bayou board market in years.
At least a couple.
Well, since the free money at 3%, 2.75% money in the COVID years. The Parish level data tells you exactly where to deploy based on your strategy. St. Mary for value, Terrebonne for appreciation, Thibodaux for stability, and Assumption for patient, deep discounts. Lafourche for balanced bets, Houma for the closing window on buyer leverage.
All right. So whether you're buying, selling, or investing anywhere in the Bayou board area, reach out for personalized, neighborhood-specific market analysis. Every parish tells a different story, and the right strategy depends on the story you're reading. So with that said, we appreciate you listening and want to remind you to check out our other episodes and market updates and what have you at rerealestatepodcast.com. And don't forget to like, share, subscribe, and comment. Tell your mom and them, and you can find us wherever you get your podcasts and on YouTube and Spotify and Apple Podcasts and iHeartRadio and everywhere.
Speaking of YouTube, if you go to rerealestatepodcast.com, you can find all of the YouTube episodes with two guys with radio-friendly faces sitting here just talking real estate in black and white for you.
There you go. All right, Ben. It's another one in the can.
I think so. That's about it. Everybody have a great day. Thanks for joining us.
See you, Ben.
See you, Clint.
While we may discuss topics such as lending, interest rates, title law, real estate law, and appraisals in addition to real estate sales and transactions, please remember that we are only trained and licensed as real estate salespeople in Louisiana. The information shared on this podcast is for general purposes only and should not be taken as legal or financial advice. We may be agents, but unless we have signed paperwork stating otherwise, we are not your agents.